Man, this video right here, this one right here, is very informative. This is one of the best videos I've seen in a while. And this early warning summit 2022 is definitely something that people need to watch before they start investing in the next year, 2022. You might even want to change up your strategy after watching this video. These three guys, they definitely bring it home. They're even going to offer you access to their power portfolio. Make sure you stick around, check it out, and let me know what you guys think about the power portfolio too. The power portfolio definitely sounds lucrative. You know, if I had that money, I might get up in that too. But this is definitely a great video and good information. Make sure you stick around to the end. It's lengthy, but I promise you it's worth it. It's worth it. They really brought it home with this one. Make sure you check it out all the way through. The Early Warning Summit 2022 and the Power Portfolio. Let me know what you guys think. Let's get into it.
Hello, I'm Lauren Savon. Welcome to the Early Warning Summit 2022. Over the past 2 years, I've had the pleasure of hosting this event, and every year I've walked away clearer and more confident about how to grow my wealth moving forward. I've witnessed firsthand how valuable and timely this event is, especially when you consider the times we are living in today. Concerns of inflation, a market crash, government debt, and a pandemic that just won't quit still has millions of investors on edge. And the so-called experts on TV aren't making it any easier by pushing fear and uncertainty 24 hours a day. To add to the confusion, Wall Street is extremely divided, with some predicting stocks will boom in 2022 and continue to march to new highs, while others are saying a sharp correction is imminent. Which explains why a recent survey conducted by financial services company Allianz discovered 54% of respondents believe a massive market crash is just around the corner. To get you the answers you deserve, we've gathered 3 of the most successful analysts in the world today. For the first time ever, these 3 experts are sharing the stage to alert you to where the markets are headed in 2022 and where you should invest your money and where you shouldn't in the coming year. These analysts have over 70 years of combined market experience, and they've successfully helped their readers navigate every bull and bear market of the past 4 decades. Tonight, you'll also learn about a unique approach to investing that's given a small group of your fellow readers the chance to beat the Dow by as much as 9 times in 12 months. To prove it, in a little bit, you're going to get the names and ticker symbols of 3 stocks that could be big winners next year. Not only that, these analysts are going to give you the name and ticker symbol to a stock that all 3 of them agree could become the #1 winner of 2022 and soar over the next 12 months. With that said, let me introduce tonight's expert panel. Louis Navellier has been called an investing icon, one of the most important money managers of our time. Multimillionaire Steve Forbes said he has a most enviable long-term track record, widely recognized for being among the first analysts to recommend stocks like Google, Apple, Facebook, Netflix, and Amazon, the so-called FANG stocks, before anyone else. He also manages over $1 billion in assets for America's richest investors. Louis is also one of the pioneers of quantitative analysis, which is the practice of using predictive algorithms to forecast major moves in stocks and in the broad markets. Forbes went as far as to crown Louis the King of Quants. His models have correctly predicted 3 of the biggest corrections of the past 30 years, including Black Monday in 1987, the dot-com crash in 2000, and the 2008 financial crisis, as well as some of the biggest market winners of the past several decades, including Apple at $1.49, Oracle when the software giant was trading for just 51 cents per share, Amazon and its innovative e-commerce platform when it was a $46 stock, and Nvidia at $17. MarketWatch hailed him as the advisor who recommended Google before anyone else. And in 2021 alone, he's handed some of his readers winners like 155% from Arbor Realty Trust, 123% from Safehold Incorporated, and 396% from Appfolio. So congrats on this success this year, Louis.
Thanks, Lauren.
Up next, we have one of the fastest rising stars in financial research today, Luke Lango. Luke has already been crowned one of America's top stock pickers. Luke was named the #1 stock picker in 2020 by TipRanks, which is an independent financial accountability firm. He's also a Caltech-educated investing prodigy. In just a matter of a few short years, Luke has managed to uncover 14 stocks that have soared way past the coveted 1,000% mark. AMD, which soared as high as 6,434% since Luke recommended it, or up to 12,066% from GameStop. And he's recommended hundreds of stocks that have more than doubled. Stocks like Trade Desk, Roku, Axon, IZEA, and Maxar, all before they went up by incredible multiples too. The list literally goes on and on. Again, most of these gains came over the last several years, not decades. And when it comes to recommending technology stocks poised to go parabolic, Luke Lango has the golden touch. When he talks, tech investors listen. Luke, it is so nice to officially meet you, and thank you for being here tonight.
Great to be here, Lauren. Thanks for having me.
And finally, we get to a man who's been described as one of America's top traders, Eric Fry. But around the InvestorPlace office, we call Eric Mr. 1000%. And the reason for that is simple. He has 41,000% winners to his credit. In fact, the average return across those recommendations is as much as an incredible 3,008%, and that is just the start. A few years ago, some of Wall Street's biggest names participated in a stock-picking contest for charity. More than 650 competitors took part, including billionaire hedge fund managers like Bill Ackman, David Tepper, and David Einhorn. Yet Eric defeated them all. His entire portfolio returned 150% in just 12 months, which is 15 times better than the historical average of the market. In 2021 alone, Eric has helped his readers lock in winning recommendations with an average gain as high as 235%. And his readers have closed out winners like 1,350% from Freeport McMoran, 470% from Micron Technology, and 500% from Galaxy Resources. Eric, what a year you and your readers have had. Thank you so much for being here. I can't wait to see what you do over the next 12 months.
It's great to be here. This is my first year participating in this event, and I'm looking forward to sharing our newest research and market forecast with everyone. The insights you're going to receive tonight lead directly to specific investments we believe will boom in 2022. But these same insights also relate directly to the entire economy, your job, your financial well-being, and so much more.
We're going to get to that in a minute, but first, I wanted to share some fascinating calls you guys have made. Luke, perhaps one of the most accurate and most profitable calls in your short career came in the second half of 2019. That's when you told your readers an electric vehicle boom was coming, just months before the 2020 EV boom unfolded. And because your readers were well positioned before the major run-up in the EV sector, they had the chance to capture extraordinary gains as high as 3,628% from Blink Charging, 3,353% from NEO, 2,596% from Plug Power, and 3,072% from industry leader Tesla. What's crazy is your best EV recommendations have handed your readers an average gain as high as 3,162%. Wow.
Yeah, I mean, it's pretty crazy, but you know what's crazier is that these gains pretty much all happen in under 2 years. You just don't see that very often in the market, so it's been an awesome ride. But for reasons I'll share in a minute, I really believe the best is still to come, Lauren.
And I can't wait to see what you have prepared for us. But Eric, you also helped your readers make massive gains from the EV boom. You took a different approach than Luke did, but that approach also led them to a 1,000% plus winner. It's a perfect recent example of how you helped your readers make a lot of money. So can you quickly tell us about that?
Sure, Lauren. So last year during the coronavirus crash, a lot of panicking investors were just dumping outstanding stocks as if the stocks themselves had caught a virus. But that's when I stepped into the markets with several buy recommendations. In fact, on March 27th, 2020, I sent an alert to my readers saying that copper was going to boom as demand for EV battery metals surged.
So I want to share one of the closing paragraphs from that buy alert, and here's what you said. Based on electric vehicle and battery demand for copper alone, the metal seems unsustainably cheap, which means the shares of many copper mining companies like Freeport McMoran have become absurdly cheap. I expect Freeport stock to recover relatively soon and deliver major gains over the next 1 or 2 years. You were so sure of this call that you told your readers to use an option strategy that would leverage this trade and produce a greater return. And just like you predicted, Freeport McMoran has soared since you wrote that. In fact, your readers had the chance to capture an incredible return of 1,506% in exactly 16 months.
That's right. It just goes to show the power of putting in the research and then doubling down on those best ideas. And that's why this message is so important. The three of us are going to give you our best ideas for the next 12 months. We'll tell you exactly what we think will happen in 2022 and exactly how we think you should play it.
And I know you guys are all dying to get to your opportunities for our readers for 2022, but we can't forget about Louis. Louis, you have made numerous correct calls throughout your career. You've become well known for all of your bullish market calls. But one thing most people might not know about you is that you've also called some of the biggest market downturns over the past 40 years. For example, your computer models started flashing early warning signs about the most devastating crashes in history. Back in September of 1987, you sent a letter to your readers saying your models were flashing warning signs. You said some sharp sell-offs are likely ahead in the market. Well, not even a month later, the stock market experienced its single worst day in history, Black Monday. The markets lost 22% on that day while erasing $500 billion in wealth. Today, it would equal nearly $6 trillion in wealth lost. But your computer models didn't stop there. Fast forward to January of 2000. That's when your computer models tipped you off about a massive move about to hit the markets. You predicted the bubble in tech stocks would burst. By May, at the latest, a major crash would grip the markets. In fact, not only did your systems help you correctly predict the market crash of '08, warning that investors were more likely to lose a fortune than make one that year, but you also found a way for your readers to see over 200% gains amidst that crisis. This is at a time when millions of Americans lost nearly half their retirement savings. You helped your readers learn how to make up to 200%. So, Louis, not only have you recommended some of the biggest stocks in history, but you've been able to detect which direction the markets are going ahead of time.
I've been described as a permabull, which means I'm always bullish on stocks, which isn't true. I simply follow my computer models. In times of economic growth, my models tend to be bullish. And in times of slowing growth, or worse, my models alert me to get out. Makes sense, right?
Absolutely. Makes sense.
The real benefit to my proprietary algorithms is they allow me to see things for how they really are and not how they seem. In other words, my forecasts aren't based on gut feelings, but rather raw data, logic, and probability. It allows me to uncover the truth about any individual stock or even the entire market. If the numbers aren't adding up, my algorithms will uncover it and alert me.
Well, here's another thing that your systems have been able to uncover every year. By using your quantitative approach, you would have been able to pick the number one performing stock in the S&P every year since 2012. So in other words, for the last 8 years, you would have identified the number one stock to own before anyone else and before they go on those big runs.
Yeah, there's a reason the three of us have experienced so much success compared to our peers. We found what really works, trust in the research, and never stray from the path. And speaking of picking the number one stock every year, I can honestly tell you, we have just found what could easily be the number one performing stock of 2022.
And you're dying to give it away, we know. And we will in just a moment. But I'd just like to quickly go over your past and your most recent predictions to illustrate a very important point here, because this industry is overflowing with people who overpromise and underdeliver, or who claim to have predicted this or that, or tell you they have a crystal ball and know exactly what's around the corner. But you guys are the real deal. So if anyone knows what's in store for the new year, it's you three right here. So with that being said, let's get to the reason why we are all here. What should investors know about inflation, the economy, and the overall health of the markets? And more specifically, what's going to happen in the markets in 2022? And what are the most potentially lucrative opportunities headed into the new year? So Luke, let's start with you.
You know, it might be hard to believe given everything the markets are facing right now, but I believe we're about to witness one of the biggest stock booms in U.S. history. And carefully selected, high-quality stocks will easily go up 300%, 500%, and even 1,000% or more over the next couple of years. Because here's what most people don't realize, Lauren. There are huge undercurrents that move and shape the economy and our daily lives. And if you identify and exploit these undercurrents, you could make extraordinary gains. You know, in the 1950s, it was all about knowing how the post-World War II boom would create prosperity and unleash a huge demand for consumer goods. If that's all you knew, you could have made a fortune. Now, in the 1990s, it was all about knowing how the internet would change the world. And if that's all you knew, literally just that, you'd have made a fortune. Well, today, there's a massive new undercurrent that's reshaping our daily lives. More specifically, it's a major technological upgrade that is unfolding across our world. And understanding this and exploiting it is the easy path to stock market riches.
Is this massive technology upgrade completely new, or have we seen something like this before?
Well, to be frank, Lauren, the last time we saw something similar was in the early 90s. So if you look back to the 1990s, we see it was a time of incredible innovation. You had the rollouts of the cellular phone networks and powerful personal computers, software, and the internet, all converging to unleash a tsunami of productivity. And the result was significantly higher profit margins for virtually every business across America. In a relatively short time frame, our ability to communicate, transact, process data, analyze data, and manage supply chains was completely revolutionized. We started living in a whole new world. Now, the massive productivity increases from the new technologies of the 1990s was like this huge shot of adrenaline to the economy, and it carried the broad market 417% higher over that decade. But you know what else it did? It also paved the way for truly innovative companies harnessing these new technologies to hand their shareholders incredible returns. I mean, companies like Cisco, for example, went up 113,000%. And Amazon, of course, which is up 72,000%. Now, of course, these extraordinary gains are not in store for every company. But today, the same story is unfolding. You know, just like the early 1990s, we are on the cusp of an amazing technological revolution that will carry the stock market to incredible new highs. We're about to see several once-in-a-generation technologies come together at the same time, which will, once again, like the 1990s, totally reshape every aspect of our lives. I'm talking about the convergence of new technologies like artificial intelligence, 5G, precision medicine, the Internet of Things, driverless cars, and the blockchain. They're coming together and recreating the very framework of modern society. And the impact these technologies will have on the global economy, Lauren, is going to dwarf the internet.
Wow. So how big an economic impact are we talking about here, Luke?
Well, we've run the math here. And when you add up the economic impact that these technologies will have on the world, it's staggering. In numbers terms, at least $45 trillion over the next 10 years. So let's start with 5G. You know, the rollout of 5G is going to unleash a new internet, if you will, and it's going to create a new wave of innovation, all while adding about $12 trillion to the economy. Then there's the Internet of Things, which will finally gain mass adoption and connect everything in our lives thanks to 5G. I'm talking advanced sensors paired with 5G connectivity, which will allow machines to monitor themselves, maintain themselves, and even work by themselves. Machines that will give birth to a new automation economy. Now that is a productivity game changer like the world has never seen before. You're going to start seeing smart cities, smart homes, smart factories, smart everything. And all that smart stuff is going to add $19 trillion to the global economy. Then we have AI and advanced robotics. Those are productivity game changers as well, because those technology platforms are going to make us infinitely more productive and efficient. And in so doing, they're going to add $15 trillion to the global economy. And then there's the big kahuna itself, blockchain technology. You know, the fancy decentralized ledger that the multi-trillion-dollar crypto market is built on top of? It's going to change the way we transfer, store, and authenticate data, which, of course, is another huge boost to productivity and efficiency with an economic impact that is so large, many analysts like myself are still trying to model it out. Now, this will be a huge boost to productivity and efficiency as well. And let's not forget about the countless innovations taking place in healthcare and medicine. The marriage of AI and biotech is shaving years off drug discovery and supercharging the efforts to eradicate cancer.
So do you think that COVID-19 has slowed down the speed of progress here?
Well, not at all. Because, if anything, actually, these developments have made me even more bullish. So the interesting fact is that many of my biggest investment trends accelerated during the pandemic. Because the coronavirus pandemic made it painfully clear how fragile parts of our economy are and parts of our infrastructure are. Now, when millions of Americans had to go from office worker to remote worker overnight, it put a massive burden on our nation's internet and communications infrastructure. Millions of children suddenly went from going to school to virtual classrooms. But if 5G was already at its full potential when COVID hit, this would have been a non-issue. Now, once it does reach its full potential, 5G will be able to handle at least 1,000 times more volume than 4G. And even though every phone company out there claims to have these incredible 5G services available everywhere, the reality is we've still barely scratched the surface of 5G's potential, which is why it's such a lucrative investing theme. But remote work, remote learning are just two of the many problems that COVID highlighted over the past 2 years. Now, another one, and maybe the biggest one actually, that businesses, both large and small, have dealt with since the pandemic hit, is supply chain disruptions. When one country after another started shutting down their borders, millions of businesses were left wondering when they'd receive the raw goods and materials that are critical to their business functions. But one technology rose to the challenge and has been making major strides in addressing this issue, and that is blockchain. Technologies like 5G, AI, and blockchain are more important now than ever before. And I believe these technologies are all at an inflection point. But for 2022, I see a very specific opportunity unfolding, an opportunity that's already gained a lot of momentum and could hand those who get positioned now absolutely massive returns.
Okay, so what's your take on inflation right now? Will that derail any of these predictions?
Inflation. Okay, well, that's a sticky topic. And let's tackle it because it's really not as scary as the mainstream media would lead you to believe. So let me start off by acknowledging that inflation is indeed red hot right now. Inflation numbers are at 30-year highs. But talks of a long period of inflation or even hyperinflation are way overblown in my opinion. And let me explain why. Most people think inflation is just a byproduct of the government printing trillions of dollars, and that if the government keeps printing money, it will cause inflation to remain red hot for a very long time. Now, on the surface, this makes sense, right? Because the more money consumers and businesses have to spend, the more it will supercharge the demand for goods and services. But money supply, Lauren, it's only one part of the equation. The other part is the velocity of money.
So that's interesting. Can you explain what the velocity of money means for our viewers?
Of course. So the quick and dirty explanation is money velocity is the rate at which consumers and businesses spend money. If individuals and businesses spend a lot of money, the rate increases. If they don't, it decreases. And if you look at this chart, you'll notice the velocity of money has been in a steady decline since the mid-90s. Now, look at this chart of the inflation rate in the U.S. going back several decades. See the strong correlation? The velocity of money and the overall inflation rate in the United States have been sliding lower and lower and lower.
So what's causing this crazy drop in the velocity of money?
Well, Lauren, we've come full circle because at the heart of the plunge in money velocity since the 1990s is none other than technological progress. Technology has drastically boosted productivity while simultaneously lowering the cost to produce goods and services. So for example, Blockbuster. Blockbuster had to pay for packaging, storage, and distribution. They constantly had to spend money to make money. But today, Netflix pays one cloud hosting fee, and they can collect billions in monthly subscription fees from viewers all over the world. Factories can produce higher quality goods in a fraction of the time compared to several decades ago. Across the world, Lauren, across every business sector, the velocity of money has dropped because technology has lowered the cost for virtually every business. Now, I promise you, this trend is not stopping anytime soon. With each passing year, the automation economy will continue to grow, and companies will continue to make more money while spending less. So, going back to today's red-hot inflation, well, it's due exclusively to pent-up consumer demand from the pandemic lockdowns as well as major backups with the global supply chain. Two dynamics that are transitory in nature. Consumer demand can't stay red-hot forever. In supply chains, they're coming back online. Meanwhile, in the background, technology is progressing at faster than ever before rates. So as new technologies like AI, 5G, and the blockchain upgrade the global economy, inflation will be tamed. And innovative tech stocks, they're going to win big. It doesn't matter who the president is or what the US dollar is doing. The best way to protect yourself financially is by backing innovative companies that can grow your money at breakneck speeds.
That's a really interesting take, and that is one that I haven't seen anywhere else. But let's transition and hear from another one of our guest experts tonight. Eric, you are one of the best big picture analysts in the world. And for example, years before the housing crisis, you knew major lenders like Fannie Mae and Freddie Mac were in serious trouble as early as 2005. You even went on CNBC and told the CEO of the National Association of Home Builders that a bubble was forming in the housing market and things would soon end badly. Now, most people can't say they've successfully navigated some of the biggest market events of the past few decades, like the housing crisis and the dot-com crash. So what's your take on the current state of the markets and things like inflation and market valuations?
Well, Lauren, I'm not quite as hopeful as Luke about the inflation trend. It is certainly possible that the inflation rate will settle down over the next few months. But if it doesn't, that's a serious threat to corporate profits and therefore a threat to the entire stock market.
And what about stock valuations? It seems like everybody in the media is saying there is a bubble, that conditions are ripe for a correction.
Right, that's true. Market valuations are definitely at historic levels. The trillions of dollars injected into the market in response to the coronavirus pandemic and the boom in retail investing has helped push stocks to incredible highs. In fact, the only other time valuations were higher was right before the dot-com bubble burst.
A lot of people might not know this, but back in the late 90s and early 2000s, you urged your readers to sell short certain tech stocks during the bursting of the dot-com bubble. And as many investors were losing fortunes during that fallout, your readers had the chance to make massive gains. Your work on doomed companies was even cited in Barron's, right?
That's true, but I don't want to get really hung up on doom and gloom. Here's the bottom line. Do I think investors should be mindful of inflation and fully understand its danger? 100%. Do I think they need to know that market valuations are at historic levels? Absolutely. But do I think they should sell everything and hide in their basements? No, not at all. Investors just need to make sure they're putting their money into the kinds of opportunities that can make headway even if inflation keeps hanging around longer than we'd like. Our CEO, Brian Hunt, has a great saying that summarizes how investors should think during these times. It's not so much a stock market as it is a market of stocks.
And what exactly does that mean?
Well, it means that now, more than ever, investors should be hyper-focused on individual companies instead of the broad markets. They should be focused on the megatrends that are transforming our society, like the ones that Luke's been mentioning. Megatrend stocks don't automatically follow the day-to-day price action of the markets. They can produce market-beating gains by charting an independent course that isn't closely correlated with the S&P 500. That's why investing selectively in megatrends can increase your odds of success during market environments like this one. So, it should never be your goal to simply drift along in the market's ever-changing currents and go wherever they happen to take you. Your goal should always be to identify and capitalize on the powerful trends that can hand you outsized gains regardless of where the overall markets are heading next. There are certainly reasons to be cautious about the overall market heading into the next year, but I completely agree with Luke. There's enormous opportunity and a lot of money to be made next year if you look in the right corners of the market. There are several sectors that could do amazingly well over the next 12 months, regardless of inflation or high valuations.
And Louis, do you have anything to share that has not been covered here so far? What's your take on the overall health of the stock market?
Yes, and I want to circle back to something you said at the beginning of this event. You mentioned earlier that roughly 54% of investors worry a big market crash is just around the corner. After all, the broader markets have been on fire this year. So it's not only normal to expect crashes around the corner, but when you look under the hood of the markets and see what's really going on, the picture doesn't look as bad as the media wants you to believe. For example, look at this table. It's data back from mid-October, but it's fascinating. You'll notice that all three of the major indices are all up, nothing shocking there. But look at how many of the individual companies have experienced a 10% or greater decline this year. Over 90% of the companies in the S&P 500 fell at least 10% or more, with the average drawdown being 18%. It was even worse for the companies that make up the NASDAQ or Russell 2000. A lot of this was caused by multiple sector rotations, but it shows that the correction a lot of people are anticipating has likely already happened.
Wow, that table is pretty fascinating, Louis.
It really is, and it's just one of the major reasons I'm still bullish for the new year and think most of the worries about a major correction are over-exaggerated. We have every reason to be cautious and bullish, but to help give our viewers some more clarity heading into the new year, let me share a few points. Earnings have been incredibly strong in 2021 and should carry over into the new year because of holiday spending. S&P 500 profit margins hit a multi-decade high earlier this year, and for the first time in over a decade, every company in the S&P 500 is projected to make money in 2022. Consumer balance sheets are the strongest they've been in decades, as American households have amassed trillions in savings. The financial firm UBS Global Wealth Management expects the S&P 500 to jump 12% next year as corporate profits continue to surge. So even though the markets are facing some major headwinds now, there are still many reasons to be bullish. In fact, the three of us believe 2022 will be a pivotal year for certain sectors of the market. You just need to know where to look.
Okay, so to recap here, it sounds like all three of you, in one way or another, see a lot of opportunity for the upcoming year. And even though there's several headwinds the markets will need to overcome, there are specific corners of the market that could do incredibly well over the next 12 months. So the next obvious question is, what corners of the markets should our viewers be looking at if they want to grow their wealth, regardless of what happens next? Luke, let's go back to you.
One of the biggest sectors that I'm excited about for the new year is the continuing boom of electric vehicles. In fact, Lauren, I think 2022 will be the year of the EV. Now, as we all know, EV stocks have been making headlines for a while now, but I truly believe the biggest gains are still ahead of us.
Well, you are certainly no stranger to helping readers make extraordinary gains from EV stocks. They've already had the chance at making gains in EV stocks as high as 3,628% from Blink Charging, 3,353% from NIO, 2,596% from Plug Power. But you're telling us the biggest gains are still ahead of us, Luke.
That's actually exactly what I'm saying. Because the gains my readers have already seen could be tiny compared to what will unfold over the next few years. Now, 2022 is going to be remembered as the year electric vehicles finally gained mass adoption. And I'm not the only one who thinks that.
So what's changed here? What's so special about 2022?
Well, Lauren, there's a lot of things happening, but the biggest reason EVs will hit a major inflection point in 2022 is because the price of a new EV could be cheaper than a new internal combustion engine car. Now, just look at this chart from ARK Investment Management. You'll notice that for the first time ever, an EV with a range of at least 200 miles will be cheaper than a Toyota Camry, which of course is one of the top selling cars models every year. Now, this might not seem like a big deal at first, but simply consider a recent study that showed the initial higher cost of an electric vehicle as the second biggest reason people don't buy EVs. For years, electric cars like Tesla were seen as a luxury and only for those who could afford it. But all that's now changed, Lauren. And it's not just the initial upfront cost that will save consumers money. ARK Investment Management figured that the 5-year total cost of ownership of an EV became cheaper at some point in late 2019 or early 2020 when compared to the total cost of a Toyota Camry. Now, this increase in savings is due to the lower maintenance and fuel costs than what's associated with combustion engines, of course.
So I'm assuming more and more consumers are waking up to this new reality.
Absolutely. Even though the adoption of electric vehicles in the U.S. has drastically lagged Europe and China, the EV market in this country is booming. In this year, EV sales growth has drastically outpaced the rest of the broader industry. In fact, during the first half of 2021, the average year-over-year growth rate for EVs was 166%. Now, we don't know what the final numbers for 2021 will be, but experts are projecting that the number's going to come down a little, but still end with a 98% growth rate over 2020. So in other words, at a minimum, the sales of electric vehicles have likely doubled this year. Now, I predict this pace of growth could be the norm for the next few years because, Lauren, the floodgates have been opened. Everybody knows about EVs, and investors who get positioned now stand to make an enormous amount of money over the next few years. And guess what? It all starts in 2022.
Okay, so EVs have gotten a lot cheaper. The sales growth of EVs are far outpacing traditional cars with combustion engines. But is there anything less obvious that will contribute to the boom next year?
Well, in the past, one of the biggest issues in the EV space has been the lack of options, right? For years, if you wanted to buy an EV, you either needed to consider an ultra-expensive Tesla or the plain-looking Toyota Prius, right? But today, go to a lot. Consumers have way more options for EV models than ever before. And the number of new car models coming out in 2022 is just absolutely crazy. Hyundai alone is releasing 10 electric cars by next year. And starting next year, Hyundai will even start manufacturing these new EVs in America, which will win over the hearts and wallets of many consumers who prefer to support American jobs in manufacturing. And the amount of money being invested right now by car makers is absolutely incredible. Ford, which is the largest car company in America, is investing $22 billion and recently unveiled the all-electric F-150 Lightning and the electric Mustang called Mach-E. General Motors, meanwhile, is aiming for at least 30 different EV models over the next 4 years. Now, this includes all-electric Cadillacs and even Hummers. That's right, the car that was discontinued because it was a gas guzzler is back, and it's completely electric. Now, what we're witnessing, Lauren, is a huge EV arms race. All told, car makers are collectively spending $330 billion over the next 5 years on electric vehicles. And as this story continues to unfold, there will literally be hundreds of different ways to profit from this single trend.
So what is the one stock that our viewers should be looking at as this EV boom continues, Luke?
Well, Lauren, one stock that I've loved for a while is ChargePoint. Now, the ticker symbol there is CHPT, and they're one of the leaders in building out the charging infrastructure to support the EV boom. And they should do very well as this trend starts to pick up steam.
And that is pretty fascinating stuff, Luke. So I'll be sure to keep an eye on this opportunity as we head into the new year. And Eric, let's go to you next. So what specific opportunities are you most excited about for 2022?
Well, Lauren, Luke already did a fantastic job of detailing how big the EV opportunity is right now. And I definitely agree that the EV boom is going to continue to gain momentum in 2022. But I think one of the best ways to play that boom is by investing in battery technology and energy storage. So more specifically, investing in the metals and other minerals that go into EVs and other renewable energy technologies.
So what kind of metals are we talking about here, Eric?
Everything from lithium and copper to magnesium and the rare earth elements. The demand for all these metals is absolutely exploding, and it's only going to increase over the next decade. Now, Luke mentioned earlier how several trillion-dollar technologies are all converging at the same time and rewriting entire segments of the economy and our daily lives. And I totally agree with that. But what most people don't realize is that many of today's cutting-edge technologies are metal hogs. Things like 5G infrastructure, EVs, renewable energy, energy storage, they all require massive quantities of specific metals in order to work their magic. So demand for these essential metals is already booming. But EVs and energy storage will take this demand to the next level in 2022.
Okay, so what is it about EVs that's causing this immediate demand here?
Well, it's really a simple matter of something called metal intensity. For example, most people don't know this, but a single EV requires 10 times more copper than a conventional internal combustion vehicle. That means a typical battery electric vehicle requires about 180 pounds of copper. So look, you don't need a master's degree in economics to know what this means for the copper price. The price of copper has skyrocketed already over the past year, and as a matter of fact, I urge my readers to invest in a company called Freeport-McMoRan before the price of copper shot up. Freeport is one of the biggest copper producers in the world, and importantly, a lot of the company's production comes from right here in the United States. Anyone who followed my advice in this trade could have booked gains as high as 1,500%.
Okay, those are some pretty hefty returns. We know lots of folks are interested in this space here, but have the biggest gains already been made? Is it too late?
I don't think so, not at all. If you go by media hype alone, you would think half the cars in America are already electric. But it's important to keep in mind that less than 2% of the cars in the United States are EVs. So that's only a 2% adoption rate. For comparison, the internet adoption rate was at 14% in 1995. And we all know that what happened to the growth rate in that space after 1995. That means when it comes to EVs, the majority of growth is still ahead of us. And I'm sure my colleagues here would all agree with me on that.
So where do you see the biggest gains here, Eric?
Well, we already know car makers, as Luke pointed out, are planning on spending $330 billion over the next several years to build out their EV fleets. And a lot of this spending is going into battery technology and the energy storage space, which makes sense if you think about it. You know, an EV is basically just a great big battery with wheels. Therefore, improving batteries and energy storage technology is the biggest potential game changer in this new EV arms race. So it's where all the real innovation is taking place. Toyota recently said it expects to spend more than $13.5 billion over the coming years with the goal of slashing power consumption of an EV by 30%. That's a big deal. And Toyota is already putting the plan to work. So earlier this year, it announced plans to build a $1.3 billion factory right here in the US and hire nearly 2,000 workers. This factory will not produce EVs, but will be 100% dedicated to manufacturing batteries for Toyota's EV fleet. Now, Toyota is just one of many companies investing in battery technology. So it's kind of hard to predict which EV company will make a meaningful breakthrough or when that might happen. That's why I prefer to own a handful of companies that will supply these critical elements to Toyota and every other EV maker. It's a classic picks and shovel play.
So is there one specific area that our viewers should be keeping an eye on headed into the new year here?
There's a lot of upside for many of the companies supplying the EV industry. But one area I've been really excited about for a few months now is lithium. So lithium-ion batteries, like the ones in EVs, make up more than 50% of the total global lithium demand. So it's estimated that a single EV like a Tesla requires about 22 pounds of lithium, which means roughly that 1 ton of lithium can only meet the demand of about 90 cars. So in other words, it requires a lot of lithium to produce an electric vehicle. To put this math into further context, Hertz, it's one of the major car companies, obviously car rental companies, announced back in October that it intends to purchase 100,000 Tesla EVs. That means this single Tesla order would require over 2.2 million pounds of lithium. Now that's a lot. Now multiply that number by the millions of EVs that are expected to hit the market over the coming years, and you have every ingredient needed for soaring lithium demand. A recent article in the Wall Street Journal came to the same conclusion as I did. With the launch of new EVs and massive investments in battery factories, lithium stocks could continue to boom for the foreseeable future. And research provider IHS Market predicts the entire lithium market could double over the next 3 years. That's why I recently issued a buy alert to my readers to take advantage of this single opportunity. And that lithium pick is up as much as 85% in less than 2 months.
Wow. So what's one company that viewers tonight should consider?
Well, one company I really like is called Standard Lithium. The ticker symbol is SLI. It's leveraging proprietary technology to produce lithium and is completely changing the industry. It currently has a partnership with the largest brine processing facility in North America. And I expect this company to reward investors as demand for lithium skyrockets.
Wow. Okay, so thank you for sharing that with us, Eric. Louis, you are up next. What is one sector that you are watching closely?
Well, I'll keep this short. But one sector I really like right now is directly related to the EV boom Eric and Luke are talking about. Anyone who knows me knows that I'm a car guy, and back in September, I was keeping a close eye on one of the biggest car events in the world. It was fascinating. The event was held in Munich, Germany, and one topic dominated the entire event. I'm talking about the massive global shortage of semiconductors, which are also known as computer chips. It's by far the biggest issue facing the car makers today, especially EV makers. Luke and Eric both laid out great arguments for the booming demand of EV vehicles and the numerous metals that make up their critical components, like their batteries. But if you want to talk about demand, get this. Your typical Ford Focus uses roughly 300 chips, but Ford's new Mustang Mach-E requires nearly 3,000 chips. Virtually every EV needs a lot of chips to function properly, but this demand reaches far beyond cars, and most people have no idea of just how bad things really are. Technology stocks are obviously getting hit hard. Apple CEO Tim Cook said supply issues related to chips could cost the company $6 billion. This issue is far bigger than just the companies that make cars or smartphones. Microchips are the lifeblood of the modern digital world. Everything from tech manufacturing and agriculture to travel to entertainment and banking can't function without massive amounts of computer chips. The list goes on and on. Virtually every single sector and corner of our economy is impacted by this chip shortage.
So, Louis, I'm wondering, where's the good news in all of this here?
Well, the good news is the tides are starting to turn. And when that happens, big gains are sure to follow. Analyst firm IDC predicts the semiconductor market will surge through 2022 as production finally begins to keep up with demand. Intel is investing $95 billion to build new factories to keep up with and stay ahead of future demand. Taiwan Semiconductor Manufacturing is investing $100 billion to increase output. Micron Technology recently announced they plan to invest $150 billion in global manufacturing. We're already starting to see these new investments pay off big for chip makers. In this year's third quarter, chip maker AMD's sales rose 54% from the previous year. And with new technologies like 5G and the Internet of Things and artificial intelligence all converging and growing every single day, demand for chips will remain strong for years. Going back to the car example, it's estimated by 2030 that chips will make up a substantial proportion of the overall cost of a new vehicle. This wasn't the case a few short years ago, but I know chip makers will gladly take the current growing pains to have such a big new business segment to serve. I think we're in the early stages of a massive chip manufacturing boom. In the short term, I expect chip manufacturers to generate incredible earnings throughout 2022. Of course, by the time these huge earnings are announced, most of the gains could have already occurred, which is why I think semiconductors could do tremendously well throughout the next 12 months and beyond.
And Louis, you are certainly no stranger when it comes to the semiconductor industry. You recommended some of the biggest chip makers in history before they were household names and Wall Street darlings. Just to give you an example, Intel, which you recommended when it was just at $3.60 stock, Qualcomm, which you recommended at $2.10, and you even told your readers to buy Navellier when it was just a $17 stock. Well, today the stock is over $250, which is a gain of roughly 1,400%.
Yeah, I've been recommending chip makers for years with great success.
Well, with that in mind, what is a company that you think our viewers should keep an eye on?
One stock I think is an interesting play for this opportunity is a company called Altair Test Systems. The ticker symbol is AEHR. They specialize in making testing equipment for the semiconductor industry. They're experiencing record bookings and growing revenue quickly. To be clear, I like this stock, but I think there are even better stocks to own moving forward, and I'll tell you about those in a moment.
So, gentlemen, the big question is, what should people do with this information? How can we know for certain that we're putting our money in the absolute best place? Luke, let's go with you.
Sure thing. So the real reason we're here tonight is because once Louis, Eric, and I realized we're all bullish on similar opportunities for 2022, we decided to sit down and see where our research overlapped. Now, what you should first realize is Eric and I, we have a different approach than Louis when it comes to uncovering big winners in the stock market. Eric and I are known as a top-down or big trend investors. We spend thousands of hours per year visiting companies, attending conferences, talking with industry players, reviewing scientific papers, and testing products. Now, we do all this work for one reason: to try to uncover 10 times, 20 times, even 100 times opportunities. Now, after I determine the industry is poised for hyper growth, I drill down further in those industries and find the stocks with the best product or service, the biggest competitive moat, the most scalable business models, etc. Now, again, this strategy is called top down. And it's kind of like saying, rising tide lifts all boats. When a trend or sector is experiencing hyper growth, it creates a lot of opportunities to make massive returns from dozens of different innovative companies.
Okay, so what's incredible is the amount of money people could have made following your top-down strategies. Eric, you have used this strategy to uncover massive winners like Ericsson Telecom for a 5,075% gain, 5,941% from Westpac Banking, and an extraordinary 11,237% from Royal Garden Resorts. And then there's Luke. You have used this top-down approach to hand your readers gains as high as 3,682% from Blink Charging, 3,353% from Neo, and 2,596% from Plug Power. I sat down and crunched the numbers before tonight, and the average gain across those 6 examples was as much as an incredible 5,314%. And Louis, on the other hand, you have made your fortune, crushed the markets, and built your legendary reputation by taking the opposite approach. So please tell us about your approach and how it differs from Luke and Eric.
Well, Lauren, if you think of Luke and Eric as taking a top-down approach to research, what I employ is much of a bottom-up approach. In other words, I focus on the not-so-obvious components of what makes a company take off 100%, 500%, or even 1,000% or more. To accomplish this, I use my proprietary computer models to crunch millions of data points with a click of a mouse. It scans over 5,000 publicly traded companies in the world and pinpoints companies with the strongest earnings growth, the best profit margins, the best cash flow metrics, and other key hallmarks of business growth and quality. Doing this all by hand would take an army of Wall Street analysts months, but my models do it in seconds. The best part is these models are self-learning. Every time I run my computer models, they get more accurate. And I've been conducting this test on America's greatest stock market winners for over 4 decades. My team and I use these millions of data points to come to one very simple conclusion: determine which stocks will go up the most over the near term. Put it differently, it's as close as possible to having tomorrow's financial news today. It's like having an inside track to any publicly traded business. Remember, numbers don't lie. And if you can get in front of the news and know which way the markets will respond, it can be the biggest edge you'll ever have. Now, before we go any further, let me be crystal clear about something. It's impossible to predict the future, but it's also common sense. If a company is growing revenue and market share, money will naturally flow into the stock and push the price up. My computer models simply help us make sense of the numbers before the financial press and Wall Street.
What a great story there, Louis. And it explains why algorithms and big data have increasingly become mainstream in investing. Billionaires like Paul Tudor Jones and Stephen Cohen are using computer-based models like yours to make investing decisions for their hedge funds with billions on the line. So this approach is now so pervasive. The Wall Street Journal ran a recent article admitting that, quote, quants run Wall Street now. But what many people don't realize is that the kind of groundbreaking work you conducted out of your dorm room many years ago helped change the way Wall Street manages billions today. And that you were one of the original analysts, I think, to employ a quant-based approach to financial research, right?
Well, I technically wasn't the first one doing this, but I'm considered by many to be one of the big leaders in the early days of quantitative analysis.
And I'm assuming that is why Forbes has dubbed you the King of Quants?
Well, that's correct.
Let me see if I understand you guys correctly. Luke and Eric, you both take a top-down approach to research and analyze entire sectors poised for huge growth like electric vehicles, 5G, or artificial intelligence. You combine these with a lot of traveling for boots-on-the-ground research where you meet with experts, insiders, CEOs of young startups working within these hyper-growth sectors. And by doing this, you both have been able to find a combined 55,000% winners. And to recap, Louis, you take the opposite approach as Luke and Eric. You and your computer models analyze and recommend individual companies based solely on key fundamentals. That's regardless of the industry. It could be tech stocks one day, then real estate, energy, or financial stocks the next. This approach finds future industry superstars regardless of sector movement. It's how you discovered Apple when it was just $1.49 per share before the iPhone and iPod were even conceived, Microsoft at 38 cents before the internet wave took place, and Nvidia in 2005 before the Internet of Things and AI chips and sensors were even a thing.
That's correct. The main takeaway is both strategies work, and there's more than one way to uncover the market's biggest winners. It's interesting to see how both approaches lead to big gains. And what's even more interesting is over the past 2 years, a combination of these two styles of investing have given a small group of our readers the chance to beat the Dow by as much as 9 times in a single year.
Yeah, I mean, this is the biggest reason we decided to team up in the first place. You know, for years, I've been a huge fan of Louis' quant-based approach to research. His work in quant-based analysis is simply, it's world-class. And he's earned the right to be called the King of Quants. So, a few months ago, we asked the million-dollar question, what would happen if we combined our two approaches and hand-picked stocks that would absolutely crush the market over a 12-month period? Well, we now know exactly what can happen. It could show you how to beat the Dow by as much as 9 times in a single year. So, a few months ago, we got to work, employing both a top-down and bottoms-up analysis on over 5,000 stocks. And I'm happy to report, we've outdone ourselves once again and created something truly groundbreaking. Now, it's called the Power Portfolio. And here's how it works. We've identified the biggest trends that have the largest and most immediate upside in 2022. Once Eric and I pinpointed our hypergrowth trends, Louis went to work running all the stocks being affected by these trends through his powerful computer models. And we found the handful of super high quality companies in each trend that are poised to grow their earnings the fastest. But we didn't stop there. Once we had several dozen stocks representing our favorite growth trends and sectors, we whittled it down even further to find the best of the best for 2022 specifically. Now, again, what we ended up with is something incredible. And I'm willing to bet most people haven't even heard about most of these stocks because they're small, innovative, and their revenues and share prices are poised to absolutely soar over the next 12 to 18 months. Now, in short, the three of us have found the 8 best hypergrowth stocks for 2022. And a year from now, we believe 100% that these 8 stocks will be among the market's biggest winners.
So Luke, this sounds incredible. It's not every day that 3 juggernauts of the stock market come together and use 2 different approaches to end up with the same stock recommendations, right?
You're absolutely right. You know, I don't know anyone else in this business who is doing this. And even if they wanted to, they don't have access to all the proprietary research that we have access to.
But why are we here? So what really sparked this investing dream team to finally come together to merge these top-down, bottom-up strategies? Louis, why don't you take this one?
Our initial thought, why did it take so long to do this? The reality is life is hectic. We all oversee teams of researchers and publish several innovative newsletters. And that was kind of the whole point of creating this new research. Imagine knowing which 8 stocks are poised to go up more than any stock over the next 12 months. Imagine the amount of time this would save you. If you want to know which stocks we believe down to our core will be our biggest recommendations in 2022, these are it. These are the stocks I want my own family members to own.
Before we get to the specific details of this new joint research project, we should address some of the more common questions that we've received leading up to this event. And with that being said, I feel it's only fair I play devil's advocate here on behalf of the folks at home. Many of your readers have emailed wanting to know exactly what this partnership is all about. So Eric, why don't you take this one? We received several questions leading up to this event regarding your own research. How is this different than your other portfolios or services some viewers may already have access to?
Thanks, Lauren. That's a great question. The short answer is that the power portfolio is the collective effort. We each brought our individual skill sets to this project in order to identify 8 stocks we believe will dazzle investors in 2022. And to be clear, I'm still very bullish on all the recommendations I've made in my individual investment services. But those recommendations, those are mine alone. Tonight's recommendations are the result of a team effort. Furthermore, the 8 stocks we've selected have been chosen specifically for their timeliness. Simply stated, we believe they are some of the best positioned stocks for 2022. In fact, we're promising their performance.
Okay, thank you for clearing that up, Eric. And I want to get to that performance promise in just a second. But first, Louis, let me ask you the same question. If you're still using the same computer models that you use in your accelerated profits and breakthrough stocks products, how is this new research different than anything you are currently producing?
It's called the Eric and Luke factor. Seriously, any of their readers who are watching know what I'm talking about. These guys have an incredible gift at identifying and exploiting major opportunities before anyone else. They make finding 1,000% winners seem like shooting fish in a barrel.
Well, Louis, here's the best part. I'm convinced the stocks that we just uncovered will dwarf any of our recent big winners. And speaking of big winners, another important reason we decided to create this product is because a lot of our readers miss some of our best ideas. With Power Portfolio, you're getting all of our best ideas for the new year all at once in one place. And now this way, you won't have to worry about missing out on our most potentially lucrative ideas in the coming months. I believe that the only way you could have achieved this before our Power Portfolio was by joining InvestorPlace's Omnia membership level. And now the Omnia membership gives you access to everything the three of us publish for life, not to mention everything our other InvestorPlace colleagues publish as well. But I'm told that they charge over $13,000 for this membership. Now, though, all that information can be a little bit overwhelming. Most of our readers just want our highest conviction ideas at once so they can get back to living their lives. And it kills us, absolutely kills us, when our readers write in and tell us they didn't get into our best recommendations because they didn't see the buy alert or they missed a monthly issue. Again, the whole idea behind Power Portfolio is now you'll never miss a single update. We're giving you our best 1,000% ideas in one powerful portfolio. We couldn't make it any easier.
I think everybody watching here is dying to know. Can you tell us a little more about these stocks?
Sure thing. These stocks are stretched across various industries with a lot of growth potential in 2022. It's a balanced, holistic, hyper-growth portfolio. For obvious reasons, I can't give you the names and ticker symbols of all of them, but here's what I can say. There are 2 specifically I'm personally excited about. These companies are hands down the best at what they do, and they could hand you a lot of money over the next 12 months, no matter what the markets throw at us. One of the stock recommendations is a truly innovative company that's revolutionizing a $371 billion industry that's dominated by big players like Google, Microsoft, and Amazon. But here's the crazy part. This little-known company is not only taking on these tech giants, but it's winning big too. Its revenue is steadily growing at breakneck speeds. And according to some experts, this company could grow roughly tenfold in the coming years. This is a stock I strongly encourage my family to buy. Another stock that made our list is an innovative software company that focuses on healthcare technology. More specifically, how it's innovating and revolutionizing how millions of Americans get their prescriptions and life-saving medications. Over 7 million patients in the U.S. are impacted by medication errors every year, which is insane to me. This company, which is an urgent buy right now, is harnessing the power of technology to create an autonomous pharmacy to deliver the right doses safely and securely to the right patient at the right time, with the goal of zero errors and 100% accountability. This company is revolutionizing the $1.2 trillion pharmaceutical industry. Now, with that being said, we really believe all the stocks in our power portfolio will be best in class for 2022.
And do you guys plan on adding more stocks to the portfolio over time?
Great question. The honest answer is it depends. The markets are never static. If the three of us identify a stock poised for a massive breakout in one of our hypergrowth trends, of course we'll add it to the portfolio. In the past, new recommendations have been added to the power portfolio, but what makes this research a game changer is the highly selective nature of these stocks. Basically, only 1 out of 600 stocks meet all three of our strict criteria. So I can say this with complete confidence because we examined more than 5,000 stocks, and the final 8 candidates were the only ones that received a thumbs up from each one of us. Remember, we'll only be publishing these stocks inside Power Portfolio due to the unique combination of our analysis. So you won't see any of these stock recommendations across any of our other research products. We've never shared these stocks anywhere else.
Okay, so how much does access to Power Portfolio cost then?
Well, Lauren, as you can imagine, it's not cheap. You're getting all of our best growth stock recommendations for the upcoming year all at once and on a silver platter. Now, when we first sat down to create this new research, we knew the value of this highly curated portfolio with massive upside potential was, I think the figure we arrived at was at least $10,000. Now, to get the same type of access to Louis' best stock ideas, for example, you need to pay 10 grand. And to get access to all three of our high-end research service, you'd have to part with at least $13,000. But ultimately, we settled on a price of $3,000 to gain access to Power Portfolio. Now, at that price, Lauren, it's a steal, considering this approach of combining top-down and bottoms-up analyses showed a small group of our readers how to beat the Dow by 9 times at one point. But we wanted to take it a step further, because 2022 is going to be a fantastic year for certain corners of the stock market. Like we've been saying, you do not want to miss the ride. We believe everyone should be able to access our 2022 Power Portfolio. So, we wanted to give you the best possible offer. If you become a new member to Power Portfolio right now, we'll let you join our new research for just $1,799, or 40% off. This is the lowest possible price we can give you. And after tonight, the price will go up at least $200 or more. That's why we strongly urge you to join us right now.
Well, it does seem like a great value, considering what similar research of this caliber typically goes for.
Well, that's because it is a great value. Look, I privately manage billions of dollars. If you want me to manage your money, you would need to be a high net worth individual with at least $500,000 to invest. With Power Portfolio, you're getting the same level of attention to stock selection, but for a massive discount. The one major piece of advice I have for 2022 is to strongly consider putting money into these 8 stocks, then sit back and watch the money potentially roll in.
You know, there's one thing we're forgetting to mention, Louis. Not only did we want this new powerful research to be affordable to everyone, but we did something else to make this decision as easy as possible for you. Now, we understand you're the one putting up the money and taking our word that these stocks are as good as we say they are. Even though we've shown you our track records for locating 500 to 1,000% winners time and time again, and even though we've shown you the incredible predictive power of Louis' computer models, we still want you to feel confident you're getting our absolute best stock recommendations for 2022. So, here's what we decided to do. If you decide to become a member to our newest research project, we'll promise your success in two incredible ways. We believe very strongly that the power portfolio will be an index crusher. It will vastly outperform popular indices like the Dow Industrial or S&P 500, and that's why we're willing to promise an astounding 4 times outperformance of the Dow Industrial. If by the end of 2022, this model portfolio doesn't beat the Dow by 4 times, you'll get another year of this research service at no additional cost. And we'll personally craft a brand new portfolio of our new favorite stocks for you. You'll get this new model portfolio for free if we don't hit our performance promise. That is how confident we are in this new research. And here's promise number 2. Although we believe 2022 is going to be an incredible year for stocks, anything can happen in the markets. However, we're so confident that Power Portfolio is bulletproof, anti-fragile, that we are promising you'll see a positive return in the portfolio even if the markets end the year down. I like to think of it as catastrophe insurance or portfolio insurance, if you will.
It sounds pretty incredible, and it's really rare to have 3 analysts with your track records put all the risk on their shoulders. So what can folks expect once they decide to join this exciting new project, Luke?
Well, if you decide to join Power Portfolio today, you'll get access to the 8 stock recommendations immediately. Plus, we'll send you our new special report detailing why each of these 8 stocks made the cut this year. And over the course of the next few weeks, if we become aware of other great opportunities, you'll be the first to know. Throughout the next 12 months, we'll keep in touch and keep you informed about all the stocks in the model portfolio through monthly issues and regular alerts. And there's something else we'd like to give people who sign up right now. It's easily one of the best opportunities I've seen in years to potentially make a lot of money.
Okay.
If you buy the 8 stocks in Power Portfolio, I'm convinced you're going to have a great 2022. But if you want a shot at making a lot of money, I'm talking about massive returns, then you need to take some of your money and invest it in the blockchain revolution that's unfolding across the world right now. And more specifically, you need to consider putting a little bit of money into the handful of cryptocurrencies that are at the forefront of this revolution. And if you join Power Portfolio right now, I'll give you the brand new report my team just finished. It's called the Top 3 Cryptos for Huge Gains in 2022. Now, a lot of people don't know this, but my team consists of blockchain experts, coders, and crypto pioneers. And a couple of years back, we developed a way of uncovering the world's best cryptos before they soar. It's kind of like Louis' quant system that grades stocks on several different metrics, except it's for cryptos. And since inception, this crypto scoring system that we've developed has produced recommendations with an average gain as high as 827%. And it's handed our crypto readers gains as high as 3,091% from Binance, 2,361% from VeChain, and an extraordinary 5,135% from Cardano. Now, of course, these are some of our best gains from our system and no guarantee for how other crypto picks will perform, but our system just flagged the 3 highest rated cryptos in the world today. Cryptos that could soar hundreds or even 1,000% over the next 12 months. And all 3 of them are detailed in our newest report, the Top 3 Cryptos for Huge Gains in 2022. You'll also learn everything you need to get started, like setting up an account and learning how to actually buy and sell cryptocurrencies. It's all there in this new report.
Wow, Luke, I gotta say, I'm a big fan of cryptos myself. This report sounds pretty incredible, and I wish I had this resource by my side when I was just getting started. So, okay, to all 3 of you, we have covered a lot of ground tonight. But before we move to closing remarks here, we owe our viewers one more free stock recommendation. Louis.
A stock the three of us all consider a strong buy right now is a company called Radware. The ticker symbol is RDWR. Radware is a leading cybersecurity company that focuses on the protection of sensitive and crucial information stored at data centers and on the cloud. The company is at the intersection of two mega trends, cybersecurity and data storage, and they form strategic partnerships with tech juggernauts like Amazon, Cisco, Microsoft, and IBM. This stock could do incredibly well as the world continues to move online and be remote. But if you want our 8 strongest hypergrowth recommendations for 2022, stocks that will capitalize on the big events unfolding next year, then you need to get your hands on our power portfolio. It's that simple.
Louis, thank you for sharing that. Radware, okay. Is there anything that you would like to say to our viewers before we actually sign off?
Well, first off, I want to thank you for hosting, Lauren, this event. I want to thank everyone who tuned in to watch. I've been producing cutting-edge financial research for over 40 years, but Power Portfolio is very special. It's been an incredibly eye-opening experience working with Luke and Eric on this project and seeing how they uncover 1,000% winners. It's rare for 3 analysts to join forces and create something truly unique for the readers. 3 heads will always be better than 1.
I agree with that, Louis. A big thanks to you, Lauren. Thanks for hosting this event, and for everyone who found the time out of their busy schedules to be here. We know this time of year can be very chaotic, but it was very important for Louis, Luke, and I to get this powerful research in your hands ahead of the new year. Working with these 2 guys, with both Louis and Luke, to create Power Portfolio has been incredibly eye-opening and rewarding, and I gotta say, it's been a lot of fun too.
All right, Luke, any final words for you?
Yeah, thanks for hosting this event, Lauren. I've been following Eric and Louis' careers for a long time, so I jumped at the chance to join them on this incredible research project. And I can honestly say, this is some of the timeliest research ever produced. So many of our readers miss out on our best stock picks, but not anymore, folks. Now you can get our best hypergrowth stock recommendations all in one place and all at once. We only do this once a year, and every time we find better stocks with bigger upside. But like I mentioned, we built this Power Portfolio specifically for you and your financial future. I sincerely hope you decide to become a new member. It will never be easier or more affordable to join than right now. And I personally look forward to working for you in 2022.
Well, I'm sure I speak for everybody when I say thank you for taking the time out of your schedules to be here. The very fact that you 3 have come together and combined your research for the everyday person is pretty admirable. And I, for one, feel more confident about my investments headed into the new year, and I'm sure those at home do too. So with that said, Luke, Eric, Louis, thank you for sharing all this incredible information with us tonight. Right now, you have an incredible opportunity to start the new year off with clarity and peace of mind that's hard to get these days. These 3 extraordinary stock pickers have come together for the first time to launch the world's most comprehensive hyper-growth portfolio. Remember, you won't find these stock recommendations in any of their other services these 3 publish. You're getting their best stock picks for 2022 all at once, and you can only find them inside Power Portfolio. And they're willing to back their research with not 1 but 2 performance promises. If this Power Portfolio doesn't allow you to beat the overall performance of the Dow by 4 times or more over the next 12 months, you will get another year of the research service for free. And the 3 of them will personally craft a new model portfolio at no additional cost. And not only that, but if their predictions for 2022 don't come true and the markets finish negative for the year, they promise Power Portfolio will deliver positive returns. And if not, you'll get another year of the research service, and they'll create a new model portfolio, again, at no additional cost. They've done everything in their power to make this decision as easy as possible for you. Of course, all investments carry risk. Past performance does not guarantee future success, and you should never invest more than you can afford to lose. With that said, if you're ready to position yourself